So we have been able to determine the EV to revenue, EV to EBITDA, EV to revenue, EV to EBITDA, the price to earnings multiple, and the price to cash flow, which are very important metrics in determining the value of Amazon. We can also apply this for many other private companies. If we want to value a private company in the same industry, it's going to be very easy for us to, if we compute matrices like this, to get the value, and then we can also apply that to our discounted cash flow valuation methodology to see how that fit into valuing that particular company. So as you can see for Amazon, we have been able to compute here the first party, and we have the average, the median, the low, the high. The third party, we have the average, median, low, and high, and all the industries up to the subscription companies where we have the average, median, low, and high. So based on this estimate, we can use further. For example, we're going to be using the EV to revenue to estimate further the value of Amazon, since we were able to classify Amazon's business segment, and we were also able to classify their business segments and the net sales generated for each business segment. So we can use this EV to revenue multiple to multiply that by in that particular time period, which will be taken for the estimate of the revenue in each of that business segment. So we can take, for example, the median, the high year as the EV to revenue. We multiply that by the revenue generated for the first party business segment for Amazon. We can do the same thing for all other comparable companies in each industry. And then we will come up with the overall enterprise value of Amazon based on those estimates. And of course, we will subsequently come up with the equity value after taking into account Amazon's net debt. So as you can see, it's pretty much easy for us to compute the value of Amazon based on comparable company analysis and precedent transactions. So moving forward, we could just copy these formulas and paste for the leverage multiples for the debt to book value of equity and the debt to the market value of equity. You can copy this. You can paste here all ESF as formulas. Then we can just copy this and paste as formulas. Then we can just use F4 to repeat the last action. F4 to repeat the last action. As you can see, we have all of those set up, and that is very nice to see in our model. So we have all of these metrics set up, and now we are ready to move on to estimating the discounted cash flow methodology for Amazon. After which we will move on to the sum of the part analysis estimate for the value of Amazon, and of course finally we will do the precedent transactions as a primary valuation method for Amazon's valuation of its intrinsic value. So we're going to be doing that subsequently, and we will also use the current market prices as a secondary methodology, and we'll also use the equity research consensus prices as our secondary methodology to come up with what exactly we think Amazon is valued at. So let us move on to our control panel tab, and let us continue with our discounted cash flow methodology for Amazon. So recall that we were able to perform our free cash flow to the firm analysis here. We're able to perform our free cash flow to the firm analysis in previous videos. So what we want to do here now is we want to use these cash flows to determine the value of Amazon based on this free cash flow to the firm. So in order to do that, we will have to determine the weighted average cost of capital, which is our discount rate, or we can say it's our interest rate, which we will use to discount these cash flows heavily back to the transaction date. So we will be using our discount rate from our WACC calculations. So there are two things we're going to do here. So we're going to estimate our WACC, which we will use to discount these cash flows, and also we will also have to come up with our terminal values based on our exit multiples and also the perpetual growth rate. So what we're going to be doing next is we're going to be estimating the net present value of Amazon based on the present value of its future cash flows and also the present